Hello and welcome to Markets Forward, your go-to show where we get you all the updates in terms of today's market action, and we'll also get you set for tomorrow's trade. I'm Nigel D'Souza. Joining me as always, Surbhi Upadhyay. Well, Surbhi.
Hi, Nigel. Well, a bit of a disappointing day once again, right?
Yeah.
And we had several reasons why we're calling it disappointing. Lots to cover over the next 20 minutes. Let's get to it.
Well, let's get straight to it. Then it was that sort of a disappointing session, an anti-climax of sorts. You woke up this morning, you thought this has to be a good day. Dollar index weaker, yields as well lower. So global cues actually were a tailwind. But we fell on our own weight in today's trading session. So it goes down as a disappointing session today because we hit those highs in the first 10 minutes and we never went back anywhere close to those levels. Well, there were divergent moves as well. You look at the top gainer on the Nifty. Well, it was from the consumption space, which was Britannia. The stock ended up by close to around 7%. The street liked the commentary coming in from there. On the flip side, Titan, they're talking about a lot of competition coming into their field of business. And also the commentary was a little bit subdued. That's what most brokerages as well made out of it. So both those two were the biggest loser and the biggest gainer on the Nifty. The outperformers today was the tech pack. Quietly, that held one end up. Infosys, TCS, all of them ended in the green. So the tech index, in fact, ended higher with a gain of around 1%. And the one that really had the tailwind was the realty index. That was up and about in today's trading session, a clear outperformer in trade. But Surbhi, what's disappointing today is the advanced decline ratio. The breadth of the market was disappointing from the first half hour itself, and that's why your portfolios may not be feeling too good at the end of today's trading session. What else, Surbhi?
No, absolutely. I mean, this market is making a habit of slipping from the day's high. And that's a bit of a concern because it's happening consistently. In fact, the fourth day in a row, the market slipped from the session highs and just never went back there. So this is a point of concern. In fact, that also tells us that this whole zone of the recent, Nifty highs, which is about 22,780 going up to 22,800. This is becoming a congestion zone for the market. And, the bulls are not able to charge above this level with any amount of conviction. That, along with the fact that we were underperforming global markets, I mean, you have to take these two things into account and then look at today's action. Another pocket of the market that was facing a lot of pressure was all of financials. PSU financials in particular, banks and non-banks from the PSU side. And that thanks to the RBI's new draft circular, which is talking about the possibility of higher provisioning for project financing. And this really slammed a lot of stocks like PFC, REC. We'll get you more highlights on that stock-specific action as we go along. But in general, the PSU financial side of the market was lower, though the private sector banks were not that bad. And, that offered a little bit of an offset. Otherwise, maybe the cut on the Nifty could have been even deeper. So that's the shape of the market. Let's move on and tell you what our lineup on the show is looking like today. We will start off by telling you more about the movers and shakers. And lots of very sharp reactions, as Nigel was pointing out there, on earnings as well. So lots of stocks on our radar as well. Britannia, Kotak Mahindra Bank, Titan, all of them in focus on the back of Q4 numbers. We will then also get to, of course, all the key events that you need to watch out for tomorrow. Remember, the next phase of polling starts, and then we'll have, of course, more results to contend with as well. But first, today's movers and shakers. Let's go across to Vivek for that. Vivek.
Well, thank you so much for that. Like you mentioned, a disappointing session, but quite a few movers and shakers, even within the market today. First on our list has to be Britannia, top gainer as far as the Nifty was concerned, managed to take along with it some of the other FMCG stocks to higher. The company is aiming for double-digit volume growth in FY25, and the street took that particular commentary very, very positively. The second stock, Kotak Mahindra Bank, recently saw significant and steep sell-off, but strong results, valuation comfort. This is something that prompted quite a lot of brokerage upgrades, and the stock ended higher significantly. The third stock is Godrej Properties. Godrej Properties came out with its results during market hours on Friday. The commentary that the company gave in terms of FY25 guidance was very strong, and that was something that the market took note of today, high by over 10%. Blue Dart Express, the company came out with its results on Thursday. Friday was a very good session, and today there was further follow-on buying on the back of a very strong Q4 that the company saw. And one company that came out with its results today was Car Trade Tech. The good set of numbers, stocks saw significant buying during the session, and also very strong margin expansion on a year-on-year basis, over 400 basis points expansion as far as Car Trade was concerned. But on the other hand, quite a few stocks also on the losing list. We have to talk about the infra financiers. So the entire pack, REC, PFC, IREDA amongst the NBFCs, and Bank of Baroda and Canara Bank, the ones that had significant exposure over there. These are the ones that took it on the chin today. Titan, another stock, amongst the top laggards in the Nifty as well. A weak margin performance that dragged the stock lower. Apollo Tyres, the entire tire pack this particular quarter, CEAT and MRF has disclosed EPR provisioning. Along with that, margin worries, and this is something that has made sure that quite a few of the tire stocks underperform. And lastly, M&M Financial, started the day off higher, but despite that, last also significant selling pressure and ended the day lower, almost 3% down.
Okay, thanks for that, Vivek. Well, let's get our guests then on the show. We have Shilpa Rao of Prabhudas Leeladhar and Gurpreet Chadha of Complete Circle who join us on the show. Hi, ladies and gentlemen. Thanks a lot for joining in. Well, Shilpa, you tell us first on the index. We are seeing that pop towards 22,700, 22,750. But this market, for now at least, is a little bit afraid of heights. What's your view, in terms of that uptrend? When will that get negated? Because you'll have to say we're still pretty much in an uptrend. But the crucial support zone, what are you looking at?
Definitely, yes. The upside band for the index is at 22,800. That is where we have witnessed, maybe this is the fourth time that we are witnessing this sell-off towards, again, 22,000 zones. So yes, this slide again towards 22,200 cannot be ruled out. And even the net longs for FIs is still at 43%. So they are also oscillating in between 30% to 55%. So either they go above 55% net longs, then we can see the sharp up move towards new all-time highs. Otherwise, when they're again towards 30,000 net longs, you can go for a buy. So this is how the trend is happening. And this range is quite well defined now in between 21,700 on the very lower side to 22,800 on the higher side. So any, and in between all this, narrow ranges where 22,200 is also a support. So one can go long now or wait for that decline to happen towards 22,300 and keep a 100 rupee stop loss. Then go for again a long towards 22,600 to 700. Otherwise, wait for a, more steeper fall where, probably levels of 21,800 can come. Then you go long.
Okay, got that. Stay on. We'll have more questions for you as we go on. But let's get down to talking about the stocks of the day. We don't have one, we have several for you and for very obvious reasons. Let's start with Britannia. Now, that stock surged about 7% following Q4 numbers, actually more than Q4 numbers. Perhaps it was the management commentary because the overall performance was just about steady. The street, however, seems quite positive on hopes of that demand recovery. Manglam has more details. Manglam, so what hit the right notes, you think, in that investor call?
Well, there were three important things that led to Britannia move the way it did in today's trading session. The first thing was that the results weren't much worse than what the street was anticipating. Yes, we all are aware that there was tepid consumer environment and the company delivered a soft quarter in that, but that was all literally baked in the price, pun unintended, out there. Revenues grew by about 1%, EBITDA declined by about 2%, net profit declined by about 4% as well. But in that as well, the street was looking for some silver linings, and that's where the second reason why the stock moved higher came about. That's the volumes for Britannia grew by about 6%, and this is at the higher end of the range of 4 to 6% growth that the street was anticipating this time. And then the big up move came by after the company in the management conference call suggested that they are gunning for some sort of recovery, mostly after the elections in the second half of this year itself. In fact, there have been a lot of nuts and bolts that they've fixed in the back end of the company, where they've gained market share, where modern trade and e-commerce grew double digits for them. At the same time, they've increased their rural distribution, overall direct reach as well, and new innovative products for the company have reached an annual run rate of close to around 275 crores itself. So all these factors did well for them, but importantly, they expect with contained inflation and stable, a good monsoon, rural demand to come back. And once that happens, they're gaining or gunning for near double-digit volume growth in FY25 for a category, for a company that has not been doing much over the last 2 years, facing a lot of toughness in the environment. They've gone ahead and given some signs of optimism, and that is something that the street likes, because the stock too, after 2 years of near underperformance, had come into comfortable valuation zones. So as a result of which, we saw that big pop on the upside.
Crispy bite, Manglam, today on Britannia, but Titan wasn't glittering too much. In fact, the commentary was pretty much downbeat. Tell us more.
Yeah, looks like the Titan shine went into Britannia, and instead of gold, marigold was doing a lot better. Because if you look at Titan, the revenue, no problems really. 19% growth in India jewelry on that base is pretty good, although a little lower than what Kalyan and Senco have been reporting. But then again, it's on a much higher base as well. Importantly, it's the margins. The EBITDA for Titan actually came in at 1100 crores versus street expectations of 1250 crores. The jewelry margins also were at around 12.1% if you adjust for bullion sales. This compares with 13% that the company reported same time last year. Watches margins also contracted by about 300 basis points. And the management commentary, especially with regards to competitive intensity and volatility in gold prices, did not do too well for them. Why is that? Because they say that, new age players and old traditional jewelers who've increased their retail presence has led to weakness in a particular company's demand. And not just that, higher gold prices, lower wedding dates also mean that demand for jewelry has been postponed. The underlying mega trend for lab-grown diamonds is also something very interesting, that they said that in the US, there has been a bit of an impact, not so much in India yet, but they are watchful of that as well. And going forward, they believe, at least for the next couple of years, margins, while they've given a guidance of 12 to 13%, they are sticking to the lower end of that guidance of about 12% itself. So with no margin levers, with other companies reporting better growth, and Titan itself trading at extremely punchy valuations, the street thought maybe give it a pass this time around, look for other companies, and look for companies where perhaps there may be some growth.
Okay, got that. Mangalam, thanks very much. Titan definitely hitting the headlines, but for the wrong reasons for a change this quarter. Well, let's move to the third stock that's on our radar, another stock of the day, and that really was Kotak Mahindra Bank, because shares of this one surged almost 5% after the bank reported a pretty strong growth performance on basically most parameters for the fourth quarter. The deposit growth was at 9.8%. We have Abhishek joining in with the highlights of the earnings. Abhishek?
Well, deposit growth is one of the best even amongst peers. If you take a look, the peers, HDFC Bank, ICICI Bank and Axis Bank, deposit growth has been on a sequential basis anywhere between 6% to 7.5%. But for Kotak Mahindra Bank, the deposit growth has been 9.9%. And despite such strong deposit growth, they have seen the highest net interest margin improvement by almost 6 basis points sequentially versus the peers who have seen from the range of a decline of 3 basis points to as high as 5 basis point. Deposit growth on a YY basis is at 23.65%, perhaps the highest that you are seeing in last 5.5 years, and sequential growth of 9.9% quarter on quarter has been the highest in last 8.5 years. A CASA ratio, or the low cost deposit ratio, is at 27 quarter low. Advances growth has been pretty healthy, 17.5% YY, which is the best in last 4 quarters, and sequential growth of 4.6%. There are one-offs in the results, AIF provisions which have been released to the tune of 157 crores, and they have also written down the gross NPA in their unsecured retail portfolio of 1,455 crores. So that's helped the asset quality this time around. Favorable tax credit of about 200 crore was also one-off in this quarter. In terms of PNL, both the NI and PAT is a beat on our poll. Asset quality slippages have increased marginally on a sequential basis. However, asset quality has improved. Gross NPA ratio is one of the lowest in last 9 to 10 years. In terms of performance, net interest margin was expected to decline, but it has improved by 6 basis points, and ROA with all these one-offs has hit an all-time high with respect to quarterly ROA of 2.97%. Now, brokerages, CLSA, JP Morgan as well as Nomura have upgraded their recommendation on the stock, and the target price ranges from as low as 1,650 to as high as 2,070 per share. Back to you.
Thanks a lot for that, Abhishek. Well, Gurmeet, you come in. We have discussed 3 stocks. The news piece, we have Kotak Mahindra Bank as well as Britannia, both of them on the upside, while Titan on the downside. Any of these stocks you like? Will you look to add on positions in any of these 3?
Nigel, I think Kotak tactically, yes. I think the market reacted post the RBI crackdown. I think, but if you see the core operating metrics that Abhishek was highlighting remain intact. The deposit growth is industry leading, almost 10% quarter on quarter, 24% annualized, which is good. Also, if you remove the one-offs, which is AI provisions being written back and other stuff, the core PPOP did well, 12-13%. My sense is tactically could be an opportunity if they can really grow. Work on. See, Bajaj got the approval within 5 months. If Kotak can, manage a similar turnaround in opening digitally, the focus because of the 811, the liability side has taken a lot of there's a lot of advantage there. So that's the reason you're seeing a lot of growth on deposits and CASA. So
I think we're just losing that line with Gurmeet. We will try and get back to him. But indeed, I think on the growth parameters, there was no complaint, neither on asset quality, though, of course, the write-offs are pretty high, as Abhishek was also pointing out. But for what it's worth, I mean, the market did salute Kotak, at least on the numbers, after the recent regulatory issues they've had with the Reserve Bank. So that was Kotak. Let's do one thing. Let's see if we can actually move to Ritu. Since we're talking banking, I mean, a different headline there came in from the financial space. Doesn't really impact the private sector banks too much, but perhaps the impact could be more pronounced on the PSU lenders. So let's tell you more about this. Now, the Reserve Bank of India. Okay, Ritu's actually there. So let me straight away toss to her. Ritu, I think, this whole draft sort of consultation paper that the RBI put out today, where a part of it deals with the possibility of higher provisioning for project financing companies. Tell us more about it and why is it such a huge concern now?
Well, this is a draft circular on project financing, and there's plenty in this circular besides provisioning. But what really seems to have spooked the market the most is that steeply higher provisioning that RBI has proposed. Keep in mind, so far, what RBI said is that if the date of commercial commencement of operations, that is the DCCO, was extended by up to 2 years, banks would only have to set aside 0.4% provisioning, NBFCs 0.25%. If the DCCO was extended for more than 2 years, both banks and NBFCs had to keep aside 5% provisioning. Now, these new draft rules say that banks and NBFCs have to set aside 5% provisioning straight up from the construction phase itself, but this provisioning can come down to half if the project becomes operational, and it can go down to 1% if certain other conditions on debt reduction, etc. are met. Now, this 5% requirement also does not get implemented immediately, but in a phased manner until FY27 end. Now, if the DCCO is deferred for more than 2 years for infra projects or more than 1 year for non-infra project, the provision goes up by another 2.5% to 7.5%. Again, this can be reversed with certain conditions. But importantly, the proposed rules are retrospective, so all existing as well as new projects are going to be impacted. So essentially, if you're a bank funding under construction projects, the provisioning charge will go up from 40 basis points currently to 5% in a phased manner. Now, banks and industry watchers we've been speaking to expect that these rules are going to tighten the funding towards project finance. Some are calling this a deal breaker. IIFL Security says there's a 7 to 30 basis point hit on bank CET1 ratio, 200 to 300 basis point hit for infra financing NBFCs. Macquarie says the capex cycle recovery could be postponed because of this. Now, I just want to say that while the regulator's intent seems to be to build the balance sheet buffer for project financing, which is seen as inherently more risky, there is bound to be some pushback, with some of the large banks we've been speaking to already indicating that they are going to take this up with RBI, so watch out for that.
Sure. Unless I'm missing something, Ritu, I guess the only way buffers can be built up is when you have higher provisions in good times, right? Preparing for the down cycle, the next down cycle. But anyway, I'm sure the last has not been said on this just as yet. Thank you for explaining that to us. Let's quickly go back to Shilpa for a comment on a lot of these stocks that were dealing with the heavy news flow today. Shilpa, so you've been hearing us discuss this from, Titan to Britannia to stocks like PFC, REC. Any actionable trades that stood out for you on them?
I believe trades in REC or PFC can be considered on the long side now. I don't see that, there's much of a downside from here. If you look at the data, REC is having a good support around 480 zone. So maybe a couple of days, a little more of a downside towards 500, you can definitely go long, and with a stop loss of 480, this stock should come up to 550 and 580 zones again. Likewise, PFC also, I believe, should do 480 to 500 zones soon, and it has a strong support at 420. So these two stocks, I believe, it has seen a lot of downside today, and I guess it's done and dusted. From here, it should go long.
Okay. All right, Shilpa, we'll leave it on that note for today. Thank you very much for joining in. Take a quick break. On that note, we'll come back on the other side and get you a lot more, including, of course, all the key events to watch today.
Welcome back to Markets Forward. Well, as promised, let's now take a quick note of all the top corporate voices of the day. Godrej Properties registered 135% growth in bookings in Q4. The executive chairman, Pirojsha Godrej, says a threefold growth in bookings in the next 3 years might be challenging. but will be able to sustain the 20% growth in the real estate cycle. Speaking about NCR and Bengaluru markets, he says there could be moderate price growth in both these two regions, which have already seen the most amount of pricing growth. Finally, he's also confident of rapid growth in operating cash flows.
Okay, let's move on. Zen-Tech is on the radar following good performance in Q4. The management has guided for 900 crores of revenue in FY25 and 2,000 crores in revenue by FY27. The company is targeting an EBITDA margin of 35% with PAT margins at 25% for the current year. We also spoke with the management of JBM Auto, and they are guiding for a revenue of 6,500 crore rupees with margins at 12% in the current year. They add that currently the company sees no plans to unlock value in the EV business and is not looking at any sort of talks of acquiring SML Isuzu. All right, and before we wrap up, as always, let's talk about some of the key market events we need to watch out for tomorrow. Abhishek is standing by with the list. Abhishek.
Well, today, US 3-month and 6-month bill auction will happen. Third phase of Lok Sabha polls tomorrow. So, voting for 94 Lok Sabha seats across 12 states. Gujarat, Karnataka, Maharashtra, Uttar Pradesh, Madhya Pradesh, Chhattisgarh, Bihar, Assam, West Bengal, Goa, Dadra and Nagar Haveli, Daman and Diu. And some of the key results which will come out tomorrow is Dr. Reddy's, Pidilite, UB, IGL as well as JSW Energy. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Well, on that note, though, we'll have to wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.